Hi guys, welcome back to my channel. Today I want to talk with you about an important topic, the difference between internal range liquidity and external range liquidity. And because as many of you already know, the market is driven by liquidity at the end of the day, and we have two different type of liquidity and that driven the market cycle. Okay, let me explain you a little bit more and better. Okay, so we have the external range liquidity below the previous low in a bearish trend and above the previous high on the bullish during the bullish trend. So basically this is my ERL, external range liquidity, and this is my, in this case, this is my external range liquidity. Cool. So now when the price create this break of structure and create this pullback, the next movement probably will be this one, to use this external range liquidity as target and to push the price from point A to point B. Same things in a bullish trend from point A to point B, thanks to this external range liquidity. And again, when the price break this level and took this external range liquidity, what my expectation is to see a pullback for a reason. Why? Because in order to create this leg on the lower time frame, we have multiple high, multiple lows, and particularly in the bearish trend we have multiple highs, and above every highs we have new liquidity. And for this reason, my expectation and our expectation is to see a pullback to fill and to take all this internal range liquidity. And our internal range liquidity could be an imbalance or an order block or a supply demand, whatever. But the most important thing is to understand that we are in this range, and probably we will see price pushing higher in the premium area and the premium zone to fill some imbalance or to mitigate some extreme on some high volume or some order blocks, whatever. And this liquidity inside this range, it's called internal range liquidity. So now they took this internal range liquidity and use which target? The external one. And over again. Okay, this is a never-ending process. And even when they change direction, they took this internal range liquidity and now we have all this internal range liquidity to take. And when this internal range liquidity has been taken, we can targeting this external range liquidity. Okay. So now let's see the same things on a real chart. Okay. And as you can see, price moving exactly in the same way of my examples, and we have this break of structure, and we had all this internal range liquidity. So they create this pullback to fill this imbalance in this case. And what's the next target? This external range liquidity. And again, they come back, fill this internal range liquidity, mitigate this hidden zone, and again, external range liquidity. And again, pull back to take all this liquidity, and again, external range liquidity. External range liquidity again, and again, they fill this internal range liquidity and change direction. Why? Because on the bigger picture, this is one big leg. So now we have all this internal range liquidity to take, and look what's gonna happen. They fill all this internal range liquidity and move down. Okay, but let's come back to our time frame. So change of direction, fill this internal range liquidity and move to this external range liquidity. And again, pull back, fill a little, because they have a lot of momentum now. So they fill this internal range liquidity and meet and target this external range liquidity. Okay. Okay. And again, pull back, internal range liquidity, mitigate this zone, external range liquidity. Liquidity, internal range liquidity, mitigate this zone, and guess what? Move through this external range liquidity. And again, pull back, took this liquidity, mitigate this zone, this hidden zone, and again, external range liquidity. This is exactly how the price move and how they create engineering liquidity, because without liquidity we can't have this clear movement. Okay, that's why the forex market is one of the best market to trade, because volatility, and the volatility has been created in this way. And basically, if we understand in which phase we are, in where is liquidity now, we can avoid stupid entries, we can avoid aggressive entries, we can avoid wrong zones. Okay, so it's very, very important to understand this concept, especially because if you understand this, you can understand exactly where the price wanna go and when it's ready to push down or push up. Okay, so again, same thing, break of structure, internal range liquidity. They wasn't able to create a new high. Cool. External range, internal range, external range, internal range, external range, internal range, external range, and again. Okay, so guys, let me know if you basically found helpful this video, and if you want, just give me your feedback on the comment section. And if you want to basically a video on a specific topic, just let me know in the comment section and I will do a video for you. Have a nice day. Don't forget to click like on under this video and to subscribe to my channel.